Now, in this piece, I want to talk about joint venture insurance. So you should be really interested in this section if you already have a joint venture in place, or you're thinking of doing something like that imminently, or you never know, as part of your plans, your property goals, that at some point you're going to have to do a joint venture to get to your property goals sooner. And joint ventures are fantastic. I've done a dozen or more JVs over the years. They accelerate your progress to achieving your property goals. They can be a key part of your property journey for many of you to get to that really important goal. Usually it's something called financial independence or financial freedom, where you can get your passive income to that level that allows you to do what you want to do, retire, quit your job, travel, do more community charity work, whatever that allows you to do. So it's a massively, massively important goal, isn't it, for you and your family? So having some type of insurance in place to ensure that it doesn't get derailed if the worst happens, then it should be something you should really, really seriously consider. Now, how does it work? Probably the best way for me to describe it is to paint the following picture. Let's assume that you and myself are going to do this joint venture together. We're going to do it on a real simple basis. We're going to be the only two shareholders in the company. We're going to be 50-50. We've both put the same money in to pay for the deposits. And we've bought, let's say, over the last 5 years, we bought 3 decent-sized buy-to-let or holiday-let type properties, whatever they are. It doesn't really matter. The investment properties within this limited company, and there's some added value there. There's some equity growth in there. We've got the profits from the 3 properties in there, and it's all going well. It's doing exactly what we anticipated doing. It's getting us to our property goals, as I said, that little bit sooner. But then, one day, I'll take the hit for this one. I'm the one walking across the road. I don't look, and I get hit by a bus. And I'm out of the picture. I'm in a bucket. So the first thing I want to say is, what happens to the shares? Well, they don't come to you because I'm doing all this for my family. So the shares, via the estate, go to my wife. So now I want to introduce you to your new business partner. Here's my grieving widow, Gillian, who is now a 50% shareholder, decision maker in your business. Now, you don't want her there, and frankly, Jill doesn't want to be there. Now, for those that know my wife, and one of the 2 of you might do, she's got some great skill sets. But property isn't one of them. It's never been her interest. It's never been her passion. It was my passion. So does she want to continue in my shoes, building a successful property portfolio? Probably not. What she wants is the money back out. She wants the value out of the business, so she's got it for the rest of the family and for her lifestyle, and to be able to somehow carry on. Now, let's assume that limited company has a value of £500,000. That's the equity in the property, that's the profits, etc. Equates about £500,000. You and I are 50-50 shareholders. So actually, the value of the shares that my wife's now holding is £250,000. So actually, she wants £250,000. So she's now looking at you and saying, can I have £250,000? I'll give you the shares. And you're going, well, yeah, if I had £250,000, I'd give you them. So that's the dilemma, that you really would probably want to help my wife out as much as possible. I've got this grieving widow here, but you're not in a position to do so. So how do we square the circle? So here's where this insurance comes into its own. So it's just like any other form of life insurance. It's the same product. It's the same pricing that you would be paying if you got it for you as an individual. But here's the difference. You take out the life insurance policy on my life, and I take out a life insurance policy on your life. In other words, when I fall under the bus, it's not my wife and family that get the payout. You get the payout. So if we take out a life insurance policy on each other's lives for £250,000, which if we were young and healthy, let's just assume for a second, might only cost less than £15 a month each. That's how cheap it is if you don't have existing medical conditions. Then, as soon as I've been declared no longer on this planet, then you can put a claim in. You get the £250,000. It's in a trust. Don't need to talk about trust today. Just to know that it's massively, massively tax efficient. Doesn't go through anyone's estate. It gets paid out directly from the insurance company to you. So you have now got £250,000. Now here's the clever bit. There's a legal document called a cross-option agreement, my third bullet point down. And this cross-option agreement ensures that either you or Jill, my wife, can trigger that agreement and force the other side to either sell the shares, i.e. if Jill triggers it, or if it started from your side, you force Jill to buy, to sell the shares to you and Jill to have them, take the money instead. So either side can trigger this cross-option agreement. And then, in essence, Jill then gets the £250,000. What do you get? Well, now you're 100% owner of that limited company. So rather than your financial goals, frankly, be derailed by a hell of a long time, because what's the alternative? If that wasn't in place, you'd have had to sell possibly, I'd say 2 of those 3 properties to then release the equity, the sale proceeds, to be able to try and pull together £250,000 to pay Jill out. And of course, is the market conditions right to even sell the property at that time? Can you sell it? As the big redemption penalties on the mortgages. There's lots of other reasons why it would be difficult to sell the property at that time. Never mind that it's now put your property journey back a number of years. So with having this in place, it does the exact opposite. You're now that 100% owner. So you are now accelerated on your property journey. You're even closer to achieving that financial independence figure that you'd set out to do back in the day. So yes, I'm no longer here, but financially it's a win-win. My wife gets the money and you get complete control of the property. So it's a fantastic piece of insurance. As I said, it's designed specifically for joint ventures, for collaborations. And so just to finish with, if it's something that you already have in place, because it can be done retrospectively, if it's something you're looking to do, then just click on the link, speak to Victoria, who's our insurance lady. She'll expand on what I've said today, give you a bit more information, give you the figures so that you and your JV partner can then have a proper conversation with all the information in front of them and take a view on whether that is something that is right for you.